Hello, hello, hello. Happy Monday. How's everyone doing? Did anybody think the weekend went by a little too quickly? Let me know your thoughts. I did. I was not ready for Monday. You know what? We should have 4-day weeks and 3-day weekends. That's what I think. Good morning, John. Good morning, Patrick. Good morning, Sterling. Good morning, Anissa. Good morning, Jake. Good morning, Heinrich. Good morning, Dean. Good morning, Royal Palms. Good morning, Jacob. Well, once I get my clicky finger working, good morning, David. How is everyone doing? Hope, again, everyone had a wonderful weekend. All right, we got a very, 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 very busy week. Not today. Well, today we got tariff talk. We already had some Fed speak going on. We got tariff talk. So we'll see how that's going. Again, tariffs are flying. Can we check grab if you remind me, Royal Palms? But today we got 3 and 6 month bill auctions. So there's nothing besides whatever Trump says and whatever comes out of the administration. Watch the World Cup final. Saw good old Donald weekend was okay. Okay. Don't forget to drop that like. Yes. And if you can come back and leave a comment, please. The algos want comments, especially more than likes at this point. So, good morning, Harold. All right. But let's go on. We got a super busy week. We got CPI inflation data tomorrow, and we got Fed speak. We got PPI on Wednesday, and we got Fed speak, and we have, of course, have the EIA numbers. Why is that still up there? I didn't take Harold off. I'm blocking the view. All right, Thursday we got retail sales, and of course, jobless claims, and then we got Fed speak. And more Fed speak. And Friday, we have consumer sentiment. So, big week ahead. Let's see what else we have this morning. Tesla's up, Salesforce up, Nvidia up, Micron down. But overall, sort of a mixed morning. You see here, again, stuff dropping with Sunday night. We'll review exactly what I'm watching. But consumer cyclical is the only real thing that's up. Everything else is down across the board based off sectors. Fed Watch still has the pause at 93% for the end of July. So how many days away is that? That's 16 days away. Boy, the time is flying. We're still in extreme greed mode, and we're still in a super expensive 38.12 market. In terms, we got earnings really kicking off this week. We got banks tomorrow: J.P. Morgan, Citi, Wells Fargo, BlackRock, State Street. Albertsons is in there. What else we have? We have ASML on Wednesday, Bank of America, Goldman Sachs. After close, we got United, Alcoa. Thursday, we have TSMC, Pepsi, Abbott Labs, Travelers, Netflix after close on Thursday. My Broker, Interactive Brokers. What else? We have 3M on Friday, and American Express, Charles Schwab. So lots of stuff coming out this week. Lots of stuff in the financial area. And overall for the month, what else? What biggies do we have? Next week we have like Tesla and Alphabet, Chipotle. So that's pretty big. We got Intel, we got Coca-Cola next week. The week after, we got Apple. What else? We got Meta and Microsoft. We got Visa, UPS, Spotify, UNH, United Health. So, again, the next 3 weeks, following week after that, even AMD. And then it starts really dying down into end of July, beginning of August. After we really get Apple, you have some key things, but not as much. So, really, the end of July, we have the potential rate pause, Meta and Microsoft all on the same day. That's going to be interesting, the 30th. All right. What do we have? What do we have here? Tariff talk trading unnecessary non-value added work. Don't even get me started. David. So, we do have a potential double top. Needs a trade below 62.46.25 to confirm and a close below that on a daily basis to trigger against the rotation zone. If it does trigger, I'm really focused on the 6,200 level. Other than that, I was looking for a potential if we were going to move up this morning, but we've created two. I was watching for a break above Friday's high, which could have been a pausing bar buy. But that, unless we have a massive rally today, that's pretty much off the table. Now, if we rally back up and rally and return to Thursday's high area, it is a triple top, and the double is off the table. Until then, we'd have to rally it back up substantially. Key stuff on the way back up, though, I'm looking at 6290 to 6300, and then it would be to the gap fill on Friday is 6300. So first, those 6290 on any rally, and then it would be to the gap fill. Key support, especially if we close below 6279, we still have that 6257.50 price magnet, and then the rollover play. I'm really going to be watching the way it closes today. Remember, weekly, still, cycle tops trying to get out of overbought. We have a 1 week. Why this is also important is last week is a 1 week pausing bar. So if we were to take out the high and follow through with a weekly high, it could be another 1 week pausing bar breakout play. But let's see how this week starts unfolding. The NASDAQ, same thing on the weekly, 1 week pausing bar. That could be a potential breakout play, but again, it's riskier with cycles at the top. Still very, very overbought in this insane market. Still, we only have a sideways correction so far to get daily cycles to the bottom, but they're not turning up yet. We have a potential double top, confirm on a trade below 22,779.75 and a close below that on a daily basis triggers. I'm focused on around 22,600 on any pullback. On a rally, again, we have some very key resistance right around 22,900. If it starts getting through there, you have the close, the gap fill close from Friday, 22,959. The Dow looks like it's already confirmed but not yet triggered what could turn into a channeling double. If this breaks down, especially below this channel line, I'm focused on 44,050. That is the key level I am focused on for the Dow. And remember, it has not triggered yet, would need a close below 44,422. To the upside, if we start breaking above the Sunday night highs, it would be to the gap fill at 44,599, so roughly 44,600. The Russell also has a potential double. The Russell on its rally up would be to the gap fill to 2247.6. Other than that, the double would trigger at 2214.9 on a close below that. Other than that, even on a rally today, unless it's a massive rally, it's not taking these doubles off the table. The VIX, slight gap up, already moving down, but its key support's right about 1725. That's where a lot of resistance was before. So I'm going to be watching if we drop back down there and find some support around 1725. The DAX, interesting, pulling back into the rotation zone. Now, cycles are still heading down, but tomorrow, if we were to take out probably today's high, it's going to be a %B buy and a rotation zone buy. So I am paying attention to that tomorrow, and that would be for a bounce play only. And that would have to be nimble. And if you're a DAX trader, my first target area would be about 24,400. That's my first target. Yields. Yes, there is a potential double top in play. Yes, on the yield basis, that would be invalidated on a trade above 4.455. Remember, it's not triggered, or just because it's a potential does not mean it's ever going to trigger or confirm. Just something to keep an eye on. That's the only thing that would have me shift the focus now on yields. We broke above the trend line last week, came back down to kiss it goodbye, rotating back up strongly on Friday. And I'm watching for higher yields across the board. 30-year climbing. Going to be watching 30-year, 4.996 on a closing basis. I'm jumping right now because look at the 10-year in the yen. Coming back to quad top territory. If this breaks out, 1.656 next key target, but this is quad topping. 40-year. Look at this move on the 40-year in the yen. And a lot of times the yen is the yields on the yen are a canary in the coal mine. So I'm really sitting up. Also, German yields climbing. So, going to be paying close attention to this. Definitely looks like it's going to close above the 62.5. So we could be retesting the high area from May, the end of May, and potentially break out higher. And look, we have some key clusters coming up here. So we could easily see 4%. And if you zoom out, I need to look up data. I need to look up data from farther back because it's not in here. But look at this. I mean, as far back as my data goes, we even had a spike high in 11, and we retested that with that recent lows, but we're retesting and breaking out. So that is going to get very potentially interesting. Bonds are sitting up and taking notice and saying, hey, all this money sloshing around, all these deficits and tariffs could be an issue out there. So, yep. Yes, Charles. So, thank you, Charles, for chiming in there. Again, chime in the chat. So keep an eye on yields, even if you don't trade them. Keep an eye. Then our stock market's just shrugging off everything. Dollar index is interesting. Then I'll get back over to some other stuff. Dollar index. Yes, we could be getting a pause here, but the dollar's been strengthening. Now, we are overbought, so this next key pullback will be critical on the dollar to see if we're actually getting a rotation back into dollars. So that is going to be interesting right there. I'm still watching for a pause, overbought getting to cycles tops at least, and then some kind of pullback, but this would be the secondary reaction back down. All right, back to some other things. Crude. Rebound on Friday, hitting that 200, breaking above it again today. I'm still in short term watching for pullbacks in crude unless we close below the 50. Now we are at potential cycle top, so we could see some pausing in here. Weekly is trying to roll over, so we could go back to consolidation, but I'm still being patient and watching for potential buy setups. The first target area we did break above, and we've retested the downside, though. So I want to see where we close today in relation to about 68.40. Gold, pausing, coming up right to that 62.5 and pulling back. As long as we don't close above this flagging pattern right here, which is roughly around the 50 EMA, I'll still be watching for pullbacks, short-term pullbacks. If we close below the 50 EMA, that's off the table for me in short term. Silver, looking a little toppy, spiking up here, very overbought. So anything in the very short term, my key level that I'm watching is right around this 38.80 area because it could pull back closer to the rotation zone. But longer term, we are overbought, but again, as long as it does not start closing into the rotation zone and you have the prior breakout level at 37, just going to be watching for ordinary pullbacks. Copper, I'm going to be watching how it reacts at about 543 on a pullback. Euro, again, we could start setting up for a bounce and a potential percent B, aggressive percent B buy. But that would have to get back above this channel for any follow-through. And that would be for a bounce play only because of what the dollar's doing. Yen, I talked about this 146.80 level. We broke through it on Friday, and we retested it today. So I'm going to be watching to see if we hold this area with a rising rotation zone, and then we could start seeing some weakening yen. First key target, 148.50 area, and then roughly around the 149.65 area. Spiders, we do have the potential double. The trigger for that would be on a trade below 617.88 with a follow-through close. The confirmation would be a trade below 617.88 with a follow-through close below there. And then other than that, I'm paying close attention to the rotation zone. The top of the rotation zone right about 621.25 where the 62.5% harmonic is. Remember, close below that shifts the probabilities for a retest possibly of Monday's of last week's lows. Other than that, rally would be to the gap fill 623.62. The Qs, again, on a closing basis, I'm paying attention to 552.60 today. On a closing basis, on any rally, we have 554.20 as the key gap fill. And we do have a potential double top in play. Bitcoin, which has been on a breakout tear through the next harmonic, we took out 120K. I'm going to be watching. Very, very overbought on daily and weekly. We broke out a better channeling pattern. Could we still run higher? Yes. Next key harmonics are 127, but this is getting a little overcooked right now. We got Tesla. Somebody upgraded this silly piece of crap today. So still being patiently watching for rollover plays in this. What else? Who else? What did you want? Royal Palms. Grab Holdings. Not a double. Only thing that would put me in, it's sort of in no man's land right now. I mean, I would not get bearish unless it lost to 200. Other than that, I mean, you start getting, if it can close above this, it's struggling to close above this $5 level. So if it can do that, you got a short-term breakout play, but you got a lot of key resistance points, and the first target would be 528 is very key. And then you have another, where's another significant level? You have one right around 545. This is, I mean, if you're bullish, I'd stay bullish unless you start closing back below 450. Other than that, this is not one. This would not be my first choice for doing anything if you're not already in it, unless you want to be really aggressive on a break above $5. It has to follow through with a close. What else? Nvidia. Again, a lot of things are very overbought at cycle tops. Nvidia. But is there any major sell setup yet? No, it's just very overbought, and we could easily pull back to the daily rotation zone. What other things do we have? What happened there? There we go. I'm just looking. We got banks tomorrow again. Let's just peek at a couple things like Citibank, which I have not looked at in a while. Again, trading above the prior breakout at new highs. I just want to see what it did with the harmonics. I don't have any insight on their earnings, but again, if it starts losing this key support area, and especially the rotation zone, I'd watch for a substantial pullback. If it pops up with earnings, 92 is the target. JP Morgan, which I haven't looked at in a while. Again, same pattern as Citi. But this one's a lot easier. We start breaking below 280.25 technically. First target would be about 271 on a key pullback. Let's see what our harmonics give us. Because we got these coming out tomorrow, so we'll be able to take a look. On a pop-up, we got roughly 300. 300 would be my next minor target if it beats on earnings, and then 308. Do you think Bitcoin will have? Yes. I'm not saying it's going to go away. I think there's still too much crap out there. There's too much unknown, and also the big players. A lot of them are unknown, and I think there's a. All right, if I was at the bank, if I had to put pour money into an asset. Now, for transferring money around, fine, Bitcoin. But for a long-term storage of wealth, it's too volatile. You could still, it's a trade, but it's not a storage of wealth yet. And notice the way off from triggering cars, nicely formed weekly potential double top. It does have a nicely formed double top. There's your weekly double top. Beautiful on the weekly. Let me get this to double. Long way off from potential triggering. But thank you for pointing that out, Sterling. That is a nice longer term pattern. Now, could it be invalidated before it ever triggers? Because again, if it does jump back up to the 79.68 level, that would be invalidated, and you still have probabilities for higher. So I would not be front running this with a short, but that would, if it did trigger, that would be very, very interesting. That's a nice little pattern right there, Sterling. Thank you. It need a long-term reduction in volatility. We have to get some of this meme coin crap out of the way. The other problem is you got still a lot of centralized holdings. Let's say some of these major centralized holdings just went on a massive selling spree. You could see Bitcoin get very volatile and drop very suddenly. Is it a trade? Yeah. It's also still, I'm not going to make this whole thing about Bitcoin. So would I be pouring all my wealth into Bitcoin? No. Can you have some of it in there? Yes. But you got to be prepared for the volatility. All right. With that, I'm going to wrap it up for now. Heading into the open, I just want to see what we're looking at going into the open. Little breakout right now. So going into the open, looks like it's really going to want to fill that gap. Again, the market is shrugging off everything, especially if volatility, if the VIX starts really breaking down today, because this pop-up is going to give the vol sellers another thing. Start selling volatilities, rotating into stocks. Now, is that going to end well long term? No. Short term, it can keep propping this market up. That's why I can't get overly bear. I can't even start watching for the bigger pullback unless we trigger some of these doubles. By the way, going into the open, really key to me besides the gap fill, we'll see how it closes above about 62.93, and if it can sustain above there. 300 by the end of the year. Okay, Coco. Then we'd see the stocks also. There's just too much money and too much leverage sloshing around, and at some point it's going to end. Don't know when. Again, it's start paying attention to the VIX. The VIX really starts breaking down. We could start seeing the continued bounce in the stocks, because everybody I'm talking to who's on the retail side is like they're all in. They're all in NVIDIA. They're all in on any pullback. It's buy it all. Leverage everything. Leverage everything to buy stocks at this point is the theme. Which in the short term, fine. But if you don't time it right, not going to end well. In the meantime, though, it's still people are in the boat for fully leveraging. What I'm keeping an eye on, again, is those yields. Yields globally, yields are starting to react to the upside again. So stocks can ignore the bond market for a while, but not forever. With that, I shall talk to everyone tomorrow. Have a wonderful, wonderful trading day. Remember, super busy trading week, so you got to stay on your toes. Today, it's all going to be about tariff talk. And I'll talk to everyone later. Bye for now.